Today, let's talk about another foundational stock in the software technology space to add to your diversified and long-term stock portfolio. That is Salesforce, ticker CRM. We like Salesforce for several reasons. Number one, its clear market leadership. It's the world's #1 CRM platform. Number two, we like Salesforce's consistent high growth and increasing profitability. Salesforce has delivered 26% CAGR over the past 5 years and has increased its operating margin by 3 percentage points during the same period. Number three, we like Salesforce's visible paths to deliver profit margin expansion. Salesforce has committed to increase its operating margin by 5 more percentage points in the next 3-4 years. Number four, we like Salesforce because it will benefit from sustainable industry tailwinds. These include cloud technology adoption, digital transformation, and companies' obsession to deliver a digital-first customer experience. And Salesforce is the company that enables all of these. Welcome to Thesis, stocks and investments for serious investors. At Thesis, our mission is simple: discover, analyze, and monitor solid companies for serious and long-term stock investors. We are not investment advisors. We are simply sharing our own research as individual investors, leveraging our experience in investment banking, strategy consulting, CFA background, and MBAs from top and Ivy League business schools. If you like what we do, follow us and subscribe to our channel. Today, we'll discuss 3 things about the company. Number one, what they do. We'll look at the company's business model and strategy, its competitors, and its historical performance. Number two, what we like about the company, including industry trends that benefit the company, its competitive advantages, and peer analysis. Number three, when to buy the stock. We'll look at the company's share price trajectory and historical valuation. We'll look at analyst ratings and target price. And given all these analyses, our point of view on when to buy the stock.
Hi, I'm your other co-host for this presentation. Basically, as serious long-term investors, we believe having a strong foundational understanding of the company is essential in making these investment decisions. We are here to help you with that and also share our point of view on what we believe is the right entry point for the stock.
Awesome, let's get started.
Great. So let's start with what Salesforce does. So what does Salesforce do? It is essentially a CRM platform, customer relationship management. Basically, it's a software suite of tools that help manage and automate functions such as sales, servicing, and marketing. This is what companies use. Essentially, the concept evolved in 1990s with the companies like SAP, Oracle, and Microsoft rolling out CRM suites, but they are all on-premise, meaning the customers, the corporations that buy this platform, they have to install that software as an on-premise software within their premises, within their offices. Mark Benioff in 1999, he started Salesforce. He used to work for Oracle and was right-hand man of Larry Ellison, the Oracle CEO and founder. So Mark Benioff, what geniusly did was he combined 2 concepts. He took the best of CRM thinking, and then he combined it with a model called software as a service, meaning cloud. So the companies don't need to install the CRM within their premise, but they can just buy subscriptions for the CRM license and leverage all its functionality and just pay a monthly or annual recurring fees. So that way it's very efficient and effective for corporations, but it's also very less expensive. So Mark Benioff started this in 1999 with the sales, and then very quickly expanded into service functions, marketing functions. So here we can see that Salesforce Cloud, whenever we talk about Salesforce platform, it essentially started with the Sales Cloud, meaning it helps companies manage and automate their sales processes, such as how do you do lead lead management? How do you store opportunities and forecast the opportunities? How do you bill your customers? How do you provide them a quote? So that's the Sales Cloud. And then Salesforce expanded to Service Cloud, meaning helping corporations with their customer service and support functions. So let's say T-Mobile has like millions of customers. So a new customer wants to install a new phone line or a landline or Wi-Fi in their homes. So T-Mobile can use Salesforce Suite to take in that support request and deploy not salespeople, service people, to go to the customers' homes and cater to those customer needs. So that's Service Cloud. And then it rolled out something called Marketing Cloud. So this is essentially helping companies across channels to do their campaign management. So you would receive from T-Mobile or Macy's some campaigns, right? Like you receive either an email or a mail, or on social media, they advertise to you. So all that advertising, marketing, campaign management can be done effectively by corporations using the Marketing Cloud. So these are the three main products of CRM or Salesforce.com. What they also geniusly did was in early 2000s, they rolled out this entire platform, the underlying platform called Force.com, as a service, meaning corporations can create their own custom applications leveraging this Salesforce cloud. So think about how Amazon rolled out its Amazon Web Services for corporate customers. Same concept.
Essentially, after 20 plus years, Salesforce is now the world's #1 customer relationship management or CRM platform, surpassing its predecessor SAP as the #1 in the world.
Let's take a look at what a sample dashboard would look like. So if you are a professional services company, say you're an investment bank using Salesforce Sales Cloud, this is what the management would see when they log into the Sales Cloud platform. So you can, for example, you can see how many deals you have closed this quarter, 18K, what is the average deal size, how many did you close this month, and how many activities you performed this month or till date. And then you can also see the pie chart, the graph, how many deals did you do by segment, meaning you've done some deals in 5 different industries. So you can see that split. And similarly, you can also compare the month to month sales evolution, how your sales have increased over the last 12-month period. Similarly, you can, on the right hand side, you can see the monthly sales comparison. So in the last 3 or 4 years, in a particular given month, how did you perform this month of this year versus this month 3 years ago? Similarly, you can do a daily sales comparison. And then on the right hand side, you can see how many what is the sales pipeline looking like? So you are forecasting. So essentially, these are all the sales related activities any company would do. So Salesforce, in a nice UI UX user interface fashion, they give you a quick snapshot.
Basically, a very visualized presentation on multiple devices, laptop, and more importantly, mobile phone. Can you talk about how Salesforce becomes Salesforce today as the #1 in the world?
Salesforce did take a very interesting journey, and it's a rapid growth. So as you know, Salesforce is now like $160 billion market cap. This entire value was created in the last 22 years. So we talked about how they started in 1999 with the Sales Cloud, and then they quickly expanded into offering their platform as a service, which is a Salesforce platform and app exchange, meaning developers can develop apps, third-party apps, custom solutions, and sell them to corporations on this app exchange. And then they entered Service Cloud in the early 2000s, followed by Chatter. So think of Chatter as Twitter or Facebook, how a community of people can talk to each other, whether it is your employees or employees talking to their customers, their vendors, their partners, all that is Chatter. And then in 2009, Salesforce introduced Salesforce Mobile. Think about how quickly they were able to offer their platform on a mobile interface. So if you think about Apple phone, which is really the first smartphone in the world, that was rolled out in 2007. So in like the next 2-3 year time period, Salesforce rapidly put their entire platform and enabled users to take a look at their platform on their cell phones. Moving forward, they made a bunch of acquisitions. So you can see companies like Demandware, Quip. In 2014 timeframe, they also released a AI tool called Einstein, so which itself is a trailblazer at that point of time. And then they made a very interesting acquisition in 2017, which is MuleSoft. So MuleSoft is essentially an integration software company. So let's say a customer, Macy's or Walmart or Target, they use like different software applications, different systems. They may use SAP, Oracle, Microsoft, but what MuleSoft does is they seamlessly integrate the data and functionalities from different systems such as Microsoft or Oracle's databases with Salesforce data. So that's a very acquisitive, very smart and thoughtful acquisition. Moving forward, they also acquired Slack. Actually, that acquisition was in 2021. So we all know Slack, what it is. It is a software collaboration tool for employees to talk to each other. So as Salesforce started to expand from a normal CRM to customer 360 platform, they wanted this collaboration tools. So that's a very big acquisition that they made in 2021.
This 1-2 punch of in-house R&D complemented by M&A really helps Salesforce accelerate the broad range of their product offering.
And I forgot about Tableau. So they made another big acquisition. I think they spent like $16 billion to acquire Tableau in 2018, I believe. So Tableau is basically a visualization software. So any corporation can see all the analytics in a very visual graphs type of way, which essentially is used by the management.
Yeah, senior management love this kind of visual graphics as a dashboard to manage their business, and that gives Salesforce a conversational topic whenever they sitting in the same room with the C-suite, who are also decision maker of any big IT spend of any big corporation. With all the products Salesforce developed over the past 20 plus years, they now generated 26.5 billion revenue. It's a relatively geographically diversified company with 68% of their revenue coming from the Americas, so mainly the US, 23% from Europe, and 9% from Asia Pacific. And by the way, this is good for investors who are looking for international diversification in their portfolio. Salesforce makes their revenue with two main models. The first one, or the main one, is the subscription model, where Salesforce charges their users a recurring fee to use their software and platform as a service. 7% of the remaining revenue come from professional services, which means Salesforce also provide consulting and advisory service to help the customers implement Salesforce platform. To double click on the 93% subscription revenue, Salesforce make around half of it with one of their earliest products, such as Service and Sales Cloud, and the remaining half would be splitting between platform and other, which is 18%, marketing and commerce 16%, and data analytics 15%.
Looking at Salesforce customers, in overall, Salesforce has 150,000 plus customers, meaning companies, corporations that use Salesforce. In fact, 90% of the Fortune 500 companies do use Salesforce. Deep diving on the type of customers that Salesforce has by the size of these customers. 11% of these 150,000 customers, meaning around 16,500 companies, are large companies, meaning they have 1,000 plus employees.
Yeah, those are companies like T-Mobile, American Airlines, Macy's, Walmart, Amazon, Spotify, etc., etc. These all fall into the large employer category. And this is important for Salesforce, although it's only 11% of their customer base, because remember, Salesforce charge customers by the number of users as subscription fees. And so the bigger the company, the more users using Salesforce, the more revenue can be derived from a single customer. In addition to that, of course, Salesforce products are so flexible that they can also customize a little bit and let medium and small companies to use Salesforce product as well.
So I think like overall, what I would say here is Salesforce is really good in terms of market leadership and positioning for the large employer segment. But they do have a lot of white space in the small and medium segment, meaning less than 1,000 employees.
Yeah, that's an interesting point. And we already talked about how Salesforce is geographically diverse. From a customer perspective, US customers account for the lion's share of their customers, in fact, around 62%, and then followed by United Kingdom at 13.6%, and then France at around 5%. And in terms of industries, the professional service industry has the highest concentration of customers at around 30%, and professional service includes
Like lawyers, consulting firms, accounting firms, they love Salesforce.
But again, Salesforce products are so versatile, they can serve a broad range of industries, if not all of them. Salesforce offers a broad portfolio of products. I can only imagine it competes with a lot of competitors. Can you tell us more about that?
Yeah, indeed. There are a lot of competition in the space. So let's talk about the traditional CRM players, right? So the likes of Oracle, SAP, and Microsoft that started offering CRM products in the 90s, but as an on-premise model. Since Salesforce has experienced such success with the software as a service SaaS model or a cloud model, each of them rolled out their own cloud with the exception of SAP. So Oracle introduced CX Cloud, Microsoft introduced Microsoft Dynamics, which is a cloud version of CRM of those platforms. And then there are a bunch of emerging players such as HubSpot and Zoho that are focused on smaller customer size, meaning if you're an employer or a customer or a business of less than 1,000 employees, HubSpot and Zoho does offer a very competitive CRM product. Adobe, of course, Adobe has always been like the PDF company, right, or marketing focused company. So they expanded recently and started offering something called Adobe Experience Cloud that integrates that PDF document creation functionality with the marketing aspect. However, Adobe's Experience Cloud is heavily focused on the marketing, not as much as on the sales and servicing aspects. In addition to these CRM players that are traditional and emerging, Salesforce also competes with a bunch of collaboration type of players, like very niche players. For example, you would have heard of Zoom and Microsoft Teams. Basically, they are focused on collaboration between employees, customers, vendors, partners. So with the acquisition of Slack and Quip, Salesforce started offering and playing, competing in that space as well. And there are other small companies like C3 AI, which is a AI focused CRM company that is offering custom solutions starting with energy, utilities, manufacturing industries.
A foundational stock is not foundational without a great financial profile. And Salesforce's historical financial performance was outstanding. Looking at its revenue growth, it has delivered a 26% CAGR over the past 5 years at a pretty consistent rate. Looking at adjusted operating income, It's not only growing, but the margins also expanding. 6 percentage point expansion from 2016 to 2021. You may ask, why do we care about adjusted operating income? What is it adjusting for? The adjustments here include stock compensation, a non-cash component of their staff's total compensation. And remember that for tech company, stock compensation is typically higher or a big proportion compared to other industries. The second component of adjustment is the amortization of intangible assets. That's basically related to the M&As or mergers and acquisitions Salesforce completed in the past few years. And it's also important to look at Salesforce free cash flow profile. For free cash flow margin, it's at 33% in 2021, which means every one out of $3 Salesforce generated as revenue become free cash flow.
Why is this free cash flow or FCF important? Like you said, they generate like 1 out of every $3 they generate in top line revenue is FCF. Why is it important?
Because cash is what you use to pay for expenses in general. And of course, with cash, you would be able to plow it back into R&D to fuel future growth, and also to return them as part of the return for shareholders, such as repurchasing their shares.
And also M&A.
Yeah, that's right. So in general, Salesforce has robust revenue growth, expanding profit margin, and it's a cash flow machine.
Now that we talked about what the company does, the products it offers, its history, who it competes with, its customer profile, and its financials, why don't we now take a look at what we like about this company?
Salesforce operates in a large end market. The overall size of the pie, or total addressable market (TAM), is estimated at 178 billion in 2022. Now think about Salesforce revenue in the same year is about 30 billion, which represents 17% of the market. Now this TAM is expected to grow at a 13% CAGR to 290 billion by 2026. Over the same time period, Salesforce is targeting a top-line CAGR of 17%. So in other words, Salesforce is expected to grow at an above-market rate compared to the total market. Salesforce growth is underpinned or supported by sustainable industry growth drivers. In the past decade, digital-first experience has been front and center of everyone's mind. The recent pandemic only accelerated this trend. From a customer perspective, people want to buy and get service from anywhere, wherever they want. Mobile phone, web, or in-store, anywhere. Employees want to have the flexibility to work anywhere, remotely, from home, or in office. This change in mindset and behavior necessitates companies to prioritize their IT spend to focus on digital transformation and cloud adoption. Because without this, companies won't be able to cater to a digital-first experience. Now, because everything's moving online on cloud, it generated a ton of data, and companies want to harness this data and unlock the power of data. And this also requires a lot of digital transformation. And this is where Salesforce come in and become an enabler for companies to be able to deliver these goals and experience. In fact, Salesforce has solid market share across the end markets it serves. It's a solid number one, number two in all of its end markets.
In addition to the clear market leadership that Salesforce already has, it set itself a target of reaching $50 billion in top line revenue for the fiscal year 2026. which represents an annual growth of 17%. It plans to do that without doing any M&A. So any M&A that they do in the next 3 years would be in addition to this $50 billion target. How do they want to achieve this? They have 4 clear growth strategies. The first one is customer 360, meaning leveraging their existing relationships with customers and do more upselling and cross-selling. The second strategy is industries, meaning offering custom tailored solutions to the different industries, meaning for financial services, manufacturing, utilities, etc. The third strategy is geographic expansion. As we talked about, right now, Salesforce generates 2/3 of its revenue in the Americas, and only 1/3 comes from the international markets, Europe and Asia. So there is significant growth opportunity for Salesforce to expand internationally. The fourth strategy is its trailblazer ecosystem, meaning leveraging the entire community of people or employees that use Salesforce but who work at their customers or who work at independent software vendors, IT companies, to leverage them and to use them as advocates and champions of Salesforce, and use them also as a secondary distribution channel in addition to its direct sales force. Let's deep dive on their first growth strategy, which is the customer 360 advantage, or land and expand. As we discussed, Salesforce offers 7 different product clouds: Sales Cloud, Service Cloud, Marketing Cloud, Commerce Cloud, Tableau, MuleSoft, and Platform and Apps. So these are the 7 products that they offer. So the customers of Salesforce that bought 4+ products in 2020, they comprise 20% of their total customers, meaning 80% of Salesforce customers have only less than 4 products. Significant room for expansion. In fact, if you take a look at, let's take a Macy's as a customer. So if Macy's has 1 product of Salesforce, and let's say it pays $100 per month in revenue to Salesforce or in fee, hypothetically, if Macy's were to buy 2 products, the revenue multiplies to 3x. So it generates $300 in fee income. Let's say if Macy's buys 4 different products, the revenue would become 24x. So that's $2,400. So basically, the gist here is that the revenue, once they cross-sell their other products, it grows exponentially. It also benefits Salesforce in terms of attrition, meaning customer attrition. So the more number of products a customer purchases from Salesforce, the more sticky those customers are. If you look at a 7 cloud customer, the attrition is the lowest compared to its 2 cloud customer, where the attrition is the highest.
I'm sure a lot of our audience here use Apple's products. So you may start with an iPhone, and then over the years you started using AirPods, you started using iPad and Mac. Now, when the time comes for you to think about the next new phone, it's much less likely for you to switch out to a Samsung phone, for example, because your whole life has been building on Apple products. The same rationale apply to Salesforce. Again, the more products a customer use Salesforce, the stickier it becomes. And Salesforce does have a track record of land and expand, meaning converting their lower product customer to high product customers. Looking at this chart here, just look at one of the earliest customer cohort, meaning customers who become new customers in the year 2007. It started as a 1.2 product customers, and over the years, fast forward to 2022, they already use 5.8 products. The best thing is Salesforce actually not make their customers, but their customers the starting point has been higher recently. Say in 2022, their starting product count is already at 2.3, which is twice the count as 2007.
So it is able to sell more products now compared to in 2007. So that shows how valuable customers perceive the different products offered by Salesforce.
Just another data point to prove how effective Salesforce to increase customers' product count and therefore increase revenue. In 2022, its revenue grew 80% of it is coming from existing customer and 21% coming from new customers, which means even if Salesforce does no marketing with no new customers, with its existing customer base, it's still going to deliver pretty decent growth.
Let's take a look at their second growth strategy, which is the industry cloud strategy. Basically, what it means is the same CRM suite, the same sales cloud, servicing cloud, marketing cloud. They take the same CRM platform and customize that solution for different industries, for customers in different industries. Let's take an example of financial services, say a bank. A bank has a different sales process compared to another industry player or another industry customer. There are different data fields that you need to store about your bank consumers. It's a different sales process, different compliance requirement, legal requirement, a security requirement. So what Salesforce did was to customize their CRM solution to the specific exact needs of a banking customer. They did that for 12 other industries. What that means is a customer in those industries can take that industry specific solution and quickly implement that without having to do a lot of customizations because it's already been customized. With this strategy, Salesforce is able to get 30% plus in terms of its selling price, average selling price. So when a bank customer buys this bank specific solution from Salesforce, Salesforce is able to charge 30% extra compared to their non-industry or generic solution. It also helps in terms of customer attrition. Customer attrition is basically, let's say you have 100 customers, 5 out of them leave every year. So 5% is a customer attrition. But with this industry cloud strategy, Salesforce is able to lower that attrition percentage by 2 percentage points, meaning now only 3 customers out of 100 customers leave Salesforce.
Another growth driver Salesforce identified is called the Trailblazer ecosystem. This ecosystem refers to people who dedicate their career around Salesforce. Either they are an independent consultant to advise company to implement Salesforce, or they help companies to manage Salesforce or utilize Salesforce product suite to maximize the potential advantages and features. And it's estimated there are around 1 million jobs created around the Salesforce ecosystem. Now think about it this way. There are 73,000 employees at Salesforce. And so this 1 million jobs they serve as kind of an extended army of Salesforce champions who enable Salesforce customers to best utilize the Salesforce product and make it as easy as possible for customers to implement Salesforce product. Now, the Salesforce also make it very easy for anyone to learn how to use Salesforce and so become a so-called trailblazer. It's interesting how they call the school as trailhead, and this people who hike the trail and learn the course as trailblazer. The school itself, the trailhead, the school system itself is totally online. People can learn it anywhere, anytime they want. As an example, even if you are a restaurant waiter or a masseuse, you can self-learn to become, say, one of the trailblazers and earn high salary with a job around Salesforce.
Without having any computer science engineering or development background, because Salesforce is a low-code, no-code platform, meaning you can drag and drop. They have these drag and drop tools where anyone can easily create functionalities and applications.
Yeah, it essentially lowered the hurdle for a company to decide, oh, I'm going to go with Salesforce versus other CRM system, because they would know if they just send the trailhead link to their employees, someone would be able to master how to implement and manage Salesforce?
So far, we focused on the revenue performance. So very impressive revenue growth, growing at 26% annual growth for the last 10 years. Now let's take a look at how its operational efficiency is, meaning its operating margin or profitability. So we took a look at the different companies that are different CRM players that Salesforce competes with. Compared to the big ones, Microsoft, Oracle, and Adobe, Salesforce does have good target revenue growth. But when you look at their operating margin, Salesforce operating margin target is 20% for 2022. But if you look at the other players, most of them or all of them, with the exception of Workday, do have higher operating margin. So Salesforce clearly has significant room and opportunity to expand its profit margin. Why do we care about profit margin? It directly impacts the share performance, directly impacts the earnings and dividend potential.
In other words, Salesforce is a heavyweight in terms of its market leadership positions, #1 CRM system. However, in terms of profitability, it's still a lightweight. And Salesforce management does recognize the need to increase profitability. Actually, for the first time of Salesforce history as a public company, management has publicly committed to a operating profit target of 25% in 3 years' time. Comparing that to the current profit margin of 20.4%, that target represents a 5 percentage point expansion.
How do they plan to do this? They identified 5 key areas, operational areas, where they could become more efficient. In particular, they identified sales and G&A. In terms of sales, improving their sales efficiency, what they essentially want to do here is increase self-service options and partner-led sales. So the self-service option, think about when you go to a restaurant. Usually the waiter or waitress come and give you a menu and then take the order. And then when you check out, they come back and give you the check. And then they swipe your card and bring it back to you. But nowadays, especially in the last 2 years since the COVID time, you started noticing when you walk into a restaurant, no one is giving the menu to you anymore. There's a simple QR code that is available on the table, and you scan it on your mobile. You can order when the waiter comes, or you can order through that as well. Similarly, when you are done with your meal, you can check out. You can pay the bill using your mobile as well nowadays. So that's what it means in terms of Salesforce when it sells its product to customers. They want their customers to self-serve and buy it themselves.
Yeah, so less man hour or less human intervention, that means less payment for wage and salary means higher profit.
The second area within sales is the sales rep productivity. So they want to focus more on land and expand, meaning they want their sales reps to sell more products to existing customers, more upselling and more cross-selling, meaning the sales rep becomes more efficient in terms of generating revenue. Instead of going after new customers, they're focusing on existing customers. Once again, the sales rep become more productive and you don't have to hire as many sales reps.
We talked about how Salesforce customer has 11% of large customers. These are customers that require attention. Now, if the rest of the small or medium customers can do self-service, and that saves account executives time to focus on highly grossing large customers.
Right, exactly. The other operational area is their G&A, general and administrative expenses. So here they want to leverage automation and optimization of specific workflows and processes. For example, they want to automate their subscription contract. Let's say Macy's is a customer. When Macy's wants to renew its subscription or buy more products, there doesn't have to be a human involved in that contract extension or contract renewal process. In that specific use case, they identified that by automating the renewal contract subscriptions, they could save 75,000 man hours. What that means, let's say a worker works 40 hours a week. So in total, a worker spends 2,000 hours, right? So 75,000 divided by 2,000 hours, meaning they are able to save around 35 jobs. That's a clear operational efficiency example.
The last but not least, Salesforce is one of the few tech companies that allow employees to choose work from home or work in the office or a hybrid version of that. That means Salesforce would have the flexibility to optimize their office space. If not many people are going to the office, they might as well pay less rent and rent out less space, and that goes into cost savings and higher profitability. Overall, we think management's target to grow revenue to 50 billion in 3 years at 17% CAGR and achieving profitability operating margin at 25% plus, it's very achievable. Its free cash flow target of 30 to 40% is in line with its historical achievement, and as icing on the cake, Salesforce for the first time authorized a 10 billion share repurchase program to return cash to shareholders. And this is a vote of confidence of their ability to generate or increase profit and free cash flow. Salesforce's pivot to profitable growth came at the right time when market sentiment started to shift from growth at all costs before the pandemic to growth at reasonable price after pandemic. Let's look at the valuation of software companies as an example. This chart here shows valuation in terms of enterprise value over revenue over the past 5 years. You can see here before pandemic, high growth software companies, defined as companies delivering 30% plus top line growth, they were trading at 26 times EV over sales multiple, compared to low growth companies, which defined as companies growing at below 15% top line, they were trading at 8 times EV over revenue. The gap here is a whopping 19 times. Now, fast forward to today, after a bear market, high growth software company is only trading at 7 times. Its valuation premium compared to low growth company has compressed to only 3 times, compared to 19 times before. So Salesforce pivot to profitable growth at scale really came at the right time.
Another key reason why we like Salesforce is its innovation, both organically and inorganically. In terms of their own organic in-house innovation, they are doing some exciting new product features and functionalities. For example, they introduced Hyperforce. They're introducing Hyperforce next year. What it means is customers such as Macy's, for example, they can stream real-time customer data from across systems and across sources. So that gives instant visibility for the senior management of Macy's, how many customers they're attracting in, let's say, holiday season, day by day, minute by minute, in real time. Another example is its net zero marketplace. Nowadays, you would have heard of all the companies pursuing sustainability climate initiatives. So every company reports their net zero carbon emissions. So Salesforce introduced this new app on their app exchange where companies can capture in real time their carbon footprint and carbon emissions and do that reporting in their annual reports. So these are two good examples of how they're organically innovating. Let's take a look at Salesforce inorganic innovation, meaning the M&As or mergers and acquisitions that it made, the main ones. Salesforce has been a very highly acquisitive company compared to its traditional peers in the enterprise software or software technology industry. So 9 years ago, in July 2013, it acquired a company called ExactTarget for $2.5 billion. it bought it at a valuation of 9 times its revenue. So at that point, ExactTarget was only making $286 million. Today, ExactTarget, 9 years after, it's making $3 billion. That's more than 10 times. So in 9 years, its revenue has multiplied 10 times. So looking at the valuation, Salesforce bought it for 9 times its revenue, but in today's terms, after 9 years, it bought it only for 1 time in revenue as a multiple. Let's take a look at another example, MuleSoft, that Salesforce acquired 4 years ago in 2018. It paid $6.5 billion, which is 23 times its revenue. And MuleSoft was generating $284 million in revenue. If we take a look at its revenue today, it's making $1.7 billion. So it's 6 times its revenue compared at the time of acquisition. So in terms of, once again, looking at the multiple that companies generally or analysts generally see, you value a company based on its sales. So it bought it for 23 times revenue, but right now the same multiple is looking at 4 times its revenue. Once again, a successful story of Salesforce making high quality, highly accretive acquisitions. The other one is Tableau that it bought in 2019 for $16 billion at 12 times its revenue. Right now, its revenue already multiplied by 1.5 times, and the revenue multiple of valuation came down from 12x to 8x. The last one, the most recent one, was Slack acquisition by Salesforce in 2021 July for $28 billion. That acquisition did impact Salesforce stock, and some analysts were trying to understand the rationale. But that being said, Salesforce wanted to expand from just being a CRM platform to entire customer 360. So people need to collaborate, and people need to come together across sales organization, across back office operations, across product, R&D, and sometimes even talking and collaborating with the partners, with their customers to co-create. So it does make sense probably like few years from now. We just need to give Salesforce some time to realize the synergies of Slack acquisition.
We also did a benchmarking comparing Salesforce with its enterprise software peers. Here we divided the peers into 2 main groups. The first group is the profitable growth group, including companies like Microsoft, Adobe, Oracle, SAP, Intuit. These companies, they all have both revenue growth and profitability. The second group is the high growth but unprofitable group. Here we include ServiceNow, Autodesk, Workday, Altizen, the maker of Jira and Confluence software, as well as Zoom. The attribute of this group is, although they have higher growth, but they are unprofitable. So looking at how Salesforce compared to these 2 groups, first of all, Salesforce top line growth of 26% is the top quartile across both groups. So pretty good. And in terms of profitability, Salesforce 16% average operating margin is below its profitable growth peers. Now we talked about how Salesforce is going to pivot to profitable growth by focusing on expanding profit margin. And so as Salesforce successfully execute this strategy, we would expect its EV over revenue valuation multiple of 4.5 times to be re-rated to be closer to the median of the profitable growth group's multiple at around 7 times.
I just want to add here that in the profitable growth segment, some of the companies like Microsoft, Oracle, SAP, they have been in existence for much longer than Salesforce. Salesforce is still a new company. It's like 22 years old compared to Microsoft, SAP, Oracle. These are like 30, 40-year-old companies. So it's just a matter of time before Salesforce starts becoming as profitable as these guys are.
To summarize, comparing Salesforce with its peers with profitable growth, Salesforce is already a clear top-line growth story. Although its operating margin lags behind now, as it executes its plan to expand margin, its valuation has the potential to expand, and it's expected to trade more like its peers' median multiple, which translates to higher share price.
So for you to believe in Salesforce as a long-term investor, the key assumption or belief is you have to believe in their profitability plan over the next 3-4 years. If that becomes true, its share price would definitely increase.
Looking at Salesforce share price performance over the past 5 years, it has appreciated by 52.25%. Comparing to its peers like Microsoft over the same period, Microsoft's share price increased by 193%. Salesforce share price increases it's a little underwhelming. However, if you do believe in Salesforce's strong business fundamentals, its ability to execute margin expansion plan, and the quality of its M&A and its ability to monetize it, the other side of the coin here is there's a significant potential for share price of Salesforce to increase from here.
Yeah. I also want to note SAP and Oracle, which are its traditional CRM competitors. SAP, in fact, its share price has decreased in the last 5 years. So in the last 5 years, its share price decreased by 3%. Oracle has only grew at 58%, which is not too far away from CRM. I think Microsoft is an exception because Microsoft not only offers CRM, but it offers an entire office productivity tools and software.
Comparing Salesforce share price performance versus major index such as Nasdaq and SP 500, Salesforce actually outperformed market or the major index until around late 2021. And then it started to come down significantly as the bear market started. And in our opinion, the drawdown here was due to temporary headwinds. Remember, Salesforce sold to international markets, around 30% of this revenue coming from international markets. So during this bear market, Fed hike, strong dollar contributed to revenue headwinds. Also, the market takes time to digest one of Salesforce's biggest M&A, which is Slack. That's contributed to Salesforce share price underperformance in recent years.
Now that we talked about what the company does and what we like about it, let's talk about the $1,000,000 question: when to buy this stock?
Now we know Salesforce has a fundamentally strong business model and growth trajectory. The next question essentially comes down to when is the right entry point. To do that, we looked at Salesforce's recent share price trajectory. Since its share price peaked about a year ago in November 2021, Salesforce share price has come down almost 49%. And that is compared to the broader market, meaning Nasdaq, coming down 29%. So there is a underperformance there for Salesforce. As long-term investors, we try to analyze why Salesforce was disproportionately impacted in the past year. From the market perspective, we all know that the technology sector has experienced a correction in the past year due to Fed interest rate hike, high inflation, COVID reversal trade, as well as recession and geopolitical risks. Now, specific to Salesforce itself, it's been impacted by some company-specific factors. First, it has seen 4 consecutive quarters of downward top-line guidance downward revision since its share price peaked in November 2021. To be specific, in Q3 21, its earnings disappointed amid Slack acquisition, and that contributed to a 11% drawdown on the day of earnings announcement. But we believe this downward revision is due to some temporary headwinds as well, such as the recent strong dollar and FX headwinds impacting the top line number when you convert local currency into US dollar, and recent investor pivot to focus on profitable companies, and we know that Salesforce operating margin is lower compared to its major peers. Another company-specific reason is the new co-CEO announcement in November 2021, and that caused some anxiety. It's just natural because Salesforce longtime CEO and founder Mark Benioff has been well respected throughout this period.
Yeah, and he's regarded as one of the greatest business leaders by Forbes, one of the world's greatest 50 leaders. So that does cause a general anxiety among investors that now that he's not fully responsible for the direction of the company, but there is another person. In addition to these three reasons, we also believe that the corporate customers in general, given the inflation and economic uncertainty and the potential for recession, they are delaying their IT spend. So you could see on the bottom of the slide that Salesforce new customers as opposed versus their existing customers, it's been declining. So in 2021, 23% of Salesforce customers are new customers, but it has come down to 21% in the last year, current year 22, and they're projecting that it will come down to 18% next year, which is understandable.
But all in, given Salesforce is a strong company, these temporary drawdown and disproportionate drawdown actually provide long-term investors a good entry point to own Salesforce stock. We also looked at Salesforce valuation over time. Here we chose the multiple as EV over revenue, or enterprise value over revenue. Salesforce currently is trading at 4.4 times in terms of multiple. That compares to its all-time high of 11.3 times. It's significantly lower. Even when compared to Salesforce 10-year average multiple, it's still 2.1x lower. And so, in our opinion, that represents an undervalue of Salesforce stock. As usual, we also took a look at how Wall Street analysts perceive the stock. In terms of analyst ratings, there are 51 analysts covering Salesforce stock. None of them rated Salesforce as a sell. In fact, 42 of them, or majority of them, rated Salesforce as a buy. So a vote of confidence from the analyst community. In terms of analyst target price, the midpoint of the target price is $215. Comparing to Salesforce, the current share price at $157.7 as we record, that represents around 36% upside at the midpoint of analyst target price.
So all in, given the recent share price performance and the analyst view, what is your point of view on what is the right price?
As usual, I'll frame it with 3 reference points. First, as we all know, analyst target price midpoint is at $215. And then, given the average 10-year multiple of 6.5 times, that translates to a share price of $197. Now, thirdly, we already knew Salesforce share price was disproportionately impacted this year. At the current share price of $158, it is still 50% below of its 52-week high. And so all in, I think we'll be comfortable buying the stock at $200 per share or below. Thank you for joining us today. We'll continue to share our research on new investment opportunities and stocks for your long-term and diversified portfolio. Please subscribe to our YouTube channel, SafeC, and visit our blog at www.safec.com.